Thanks for coming tonight. So my name is Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many, many years. We hold events multiple times a week from San Jose to San Francisco. We always have a busy, busy calendar of events. I'd like to highlight one event that's coming up, Thursday, April 25th, how to successfully pitch to investors and get funded, featuring angel investor Gary Jenks. That's going to be a few miles from here in Palo Alto. So check out the details for that event and all of our events on our website, ideatoipo.com. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we've organized, produced, and promoted over 2,000 events. We have over 60,000 members among all our meetup groups in the Bay Area. By any standard, by any measure, we're the most active, most prolific startup event organization in Silicon Valley, bar none. There's a little bit of a delay there, but I don't know what's up with that. But that's okay, I'll take it. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff that you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is an aspirational ecosystem that attracts people from all over the world to come here to do great things. Who here is not originally from Silicon Valley? Who here was born and raised in Silicon Valley? Close enough. Bay Area. All right, 4 of you. Awesome. Well, welcome. So whether you were born and raised in the Bay Area or Silicon Valley or just got here last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, it is important that we provide value at each and every one of our events. Not just value for your money, which is important, so we make sure that our events are affordable. And if you cannot afford the cover charge for whatever reason, come talk to me and we can work something out. And at each and every one of our events, we make sure that we have a delicious buffet meal. Is this a delicious buffet meal? All right, let's hear it for the sponsor of that delicious buffet meal, the law firm of Perkins Coie. More importantly, though, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Is anyone here getting any younger besides our panel? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many, many partners to help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, lots of other players in the Silicon Valley startup ecosystem. So tonight, once again, we're grateful to Perkins Coie for hosting us, providing the buffet, and providing us with an awesome moderator. So once again, let's hear it for Perkins Coie. Applause. Some of our other partners here tonight, I would also like them to come up and say a few words. Let's hear it for Josh and 42. Applause.
Oh, all right. I'll be quiet. So I'm Josh with 42, and what 42 is a completely free project-based coding school. So we don't have teachers, we don't have classes, and when I say we're free, it means we're actually free. You never actually pay anything back. I manage our events and our startup programs. If you want to learn anything more about us, just find me afterwards. I'd be happy to share anything. Thank you.
Right, next up, we have Sardar from SVI Hub. Let's hear it for Sardar. Applause.
Hi, everybody. I'm Sardar, and I used to work for SVI Academy. Maybe some of you guys heard. We were doing some training programs, especially for the international startup companies. Now, with the new investors, international investors, we start to offer some other services such as corporate innovation, business development, and accelerator programs, and all of them at SVI Hub. It is one of the new co-working spaces. We do have more than 200 tropical plants. It's very unique, and it has a very different vibe here in Silicon Valley. Please feel free to stop by and check out the SVI Hub. Also, I'd like to talk about the two upcoming programs with two sentences. One of them is between May 20 and 24, we are going to host like 10 to 15 international companies. And the other one is going to be between July 8 and 11. It's going to be for 3 days. And we are going to host like 20 big corporates from all over Europe. And they're going to come here to check out the Silicon Valley ecosystem. And they're planning to invest some hand-picked startup companies. Again, feel free to stop by at SVI Hub. Thank you so much.
All right, next up we have Angela from Life Stages. Applause.
Thank you, Rob. My name is Angela Chen, and I own a business called Life Stages Insurance and Financial Services. What I'm passionate about is to help you protect your time, your health, and therefore protecting your money. As entrepreneurs, well, as employees, you may be taking granted that your employer is providing your life insurance and your health insurance. Now that you have an idea that you want to, implement, put in place, you have to leave your employer. Well, before you do that, make sure you have a plan to have your life and health insurance lined up. Because once you leave, that goes away. Okay, for entrepreneurs, if you need to raise money, investors often ask that you have insurance so that something happens, their investment is protected. It's called Keyman Insurance. So let me know if you want more information about this. Thank you very much.
So our local mission is to help entrepreneurs here in Silicon Valley. Our greater mission is to democratize entrepreneurship and innovation all around the world. To that end, we maintain a robust YouTube channel, youtube.com/idea to IPO. We have tons of videos there. We've documented and archived many, many of our events. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge, whether you're in Palo Alto, San Francisco, New York, Mali, Moscow, or Timbuktu. Our partner in this endeavor is Tim Jeggers of Jeggers Films, one of the top professional videographers in Silicon Valley. Let's hear it for Tim. Applause.
Thank you, Rob. Thank you, everybody. All right, we're doing good so far. I'm Tim, like Rob said. I've been working with Idea to IPO for several years now. I cover all sorts of events throughout the Bay Area. I also do photography on top of video. I'm all over the place. If you have any questions about video photography, feel more than free to come back and say hi later. I'll be here all night. And thanks for coming.
All right, ladies and gentlemen, here's a program for the rest of the evening. Our panel will launch into a spirited, entertaining, informative, dynamic discussion, right? Audience members, hold your questions until 8 p.m. At that point, we're going to open it up to audience members with questions. We're going to have a line here. We're going to take as many questions as possible. At 8:30 p.m., we're going to wrap up the formal program. You can hang around, network, socialize, and connect. As a courtesy to Perkins Coie, we would like to leave the building by 9 p.m. However, you can continue the conversation outside. Meet me at Starbucks, Rosewood, whatever. We have different options. So without further ado, I'm going to pass it off to our distinguished moderator. He is one of the top corporate and startup attorneys in Silicon Valley. He's a partner at this prestigious firm, and he is passionate about helping entrepreneurs succeed. Let's give it up. Yeah, let's give it up for Armand Palavan.
Thank you so much, Rob. Hello, everybody. So it sounds like we have to keep a distance from the speaker in order for this thing not to screech away. My name is Armand Palavan is my last name. I'm a partner at Perkins Coie, and I focus my practice around venture capital, merging companies, and private equity. For those of you who don't know the difference between venture capital and private equity, or you may have some idea about it, but not 100% sure, I'll give you my definition of venture capital versus private equity. Private equity is typically a transaction pursuant to which, an investor or syndicate of investors buys a controlling interest in a company. So they will take over the board of the company, they'll take 51% ownership of the shares of the company. And usually in a private equity transaction, cash is transferred by the investor directly to the shareholders of the company. So the shareholders cash out, so to say, right? Then the difference between that and venture capital is that venture capital investments are typically minority investments, so they will take somewhere between 10 to 40% of the company. There's usually a chunk of money, chunk of the capital stock of the company or the pursuant to options reserved for employees of the company. So they don't take a controlling interest in the company. They don't control the board. Though over time, what could happen is that the syndicate may very well own a majority interest of the stock of the company and control the board over time. So that's the first thing that I always like to talk about, because my practice is really focused around these two areas of law, so that you guys are with me on the same page about what venture capital investment is. We have this amazing group of panelists here, and I tell you every time I do one of these things that I do them 4 or 5 times a year with Rob in this program, I'm always delighted and thrilled to kind of be at your as a cohort to all of you guys. So I look forward to the evening tonight. I want to give you just a couple of words about myself and the firm. So I'm as local to Palo Alto as most of you will ever see. I've been here for more than 40 years, and I grew up here. I went to school at Berkeley and then Hastings, and then I went to Washington, D.C. and practiced at the U.S. Court of Appeals for the D.C. Circuit. And then I went to work at a big Wall Street law firm, and since 1995, I'm back here working in venture capital and private equity. Perkins Coie is one of the top 25 to 30 firms globally. We have 19 offices, mostly in the U.S. and some in the Orient, 3 of them in the Orient. We really focus our practice in 2 areas, I would say. One is in terms of high growth companies, so they could be across any sector, and very much so in the field of technology. We've been around for more than a century, so we've done something right to have lasted more than 100 years. It's a great privilege for me to be a partner here, and I love the practice. And I, as Rob said, really love helping entrepreneurs. So, hopefully there'll be occasions that we can engage in a one-on-one discussion. If you ever need to get a hold of me, send me an email. I have my cards. My assistant reads my emails, and we'll get together over coffee or a drink or something here in the office and talk shop and figure out how I can help you. So with that, I wanted to make an introduction of the panel first, okay? And then we will get the program started. So Peter, if you could please tell me a little bit about yourself and your background, and maybe you want to tell us about a few interesting facts about yourself, maybe with school and some of your prior employment engagements.
Sure. So hello, everyone. Pleasure to be here tonight. Where do I begin? How far should I go back? But I started my career at a startup, actually, not too long after I graduated from college. Well, I was young and experienced, obviously, made a lot of mistakes. Things didn't play out as well as they were supposed to. So I decided to pursue a career in banking, moved to New York, worked in oil and gas for a number of years. Then I moved out here to California. It's been about 4 years now, where I worked in municipal finance, so on the fixed income side. And I've always been impressed with the entrepreneurial spirit here in the Silicon Valley, and I thought, how can I somehow be a part of it? And I looked for ways, and ultimately I decided to, be on the opposite side of the table and work on the venture capital side. And it's been very exciting so far. Being able to listen to ideas and, feel the passion of various founders, and then ultimately be able to help them turn those ideas into reality is a beautiful thing. And, so for several years now, I've been with Pegasus Tech Ventures. So we are a global venture capital firm with headquarters here in the Silicon Valley, but we also have presence in 14 countries and 7 locations worldwide. We've run 25 funds in parallel currently, and we invest in companies in various stages, predominantly Series A plus. And we are also very agnostic in terms of the stages of the companies that we invest in. The unique business model that we offer is the fact that our LP base are large corporates. So on top of just the traditional equity investment, we help various startups, scale up overseas in Asia. And Asia is a tremendous market if you think about it. 2/3 of the world's population are in Asia. So today we've invested in over 140 companies, AR, VR, IoT, automotive. We also invest in Fintech, obviously. We've made investments in companies in Indonesia, in Malaysia, in Japan that are doing something very interesting in the Fintech space. And now another initiative that we've taken 3 years ago is Startup World Cup, where we host a series of regional events in over 40 countries. We have some very amazing startups participate in those events, and then we bring all the winners here to San Francisco, where they'll participate in the grand finale, which will actually happen on May 17th this year, and they compete for a $1 million investment prize. So if any of you are interested, please, I would love everyone to attend. Yeah.
Thank you, Peter. Jordan.
Good afternoon. I'm Jordan Wabe. I'm with Bay Angels. Bay Angel is an angel investment organization. We've been around since 1998. We invest in a wide range of sectors, typically in the seed, early stages of angels, pre-A and occasionally in A. Well, there's a couple of sectors we avoid on the FDA and the heavy hardware, but otherwise we are agnostic. There's about 55 of us in the world, about 40 some in the USA, Silicon Valley, and some overseas in different parts of the world. Our investment thesis is really go with what the angel group feels is best for their investment. The money comes out of their own pocket as opposed to a fund or an LP. We look at about 80 companies every month, and of those we screen them down to about 4 or 5. We have nice ecosystem around us that does a lot of referrals. And we go through some rigorous process where you go through 4, 5, 6, 7, 10 hours of work before you make it to the final stage. The idea is to, we look at the startup and the investor as a customer. Our customer is a startup because we want to make sure we serve the best investment opportunity there is, and vice versa for the investors, so they value our relationship and what have you. And on average, we invest in about 1 or 1.2 companies every month, 10 times a year. And we also very open. We give our deals, whether we invest in them or not, to angel investors and VCs and what have you. If they're good enough for us, they could be good enough for anybody else. So we basically share the good. Something about myself. My first management responsibility was when I was 7 years old. Every summer I would go to the ranch, and I had 7 or 8 goats. It was my responsibility to take them to the field, feed them, bring them back in one piece. I didn't think much about it back then. It was very boring, dull, trying. I hated it. But over time, when I turned 30, I realized I learned a lot. And some of the things you learn is you just learn to stretch yourself and accept the level of responsibility is given to you and try to live up to that expectation as much as possible. I don't think my dad had that vision in his mind when he gave me the goats to herd, but it was a sense of learn to do something really well and then move on to the next level and the next level. Afterwards, I left the country of Jordan, came here, went to school, did bunch of jobs, manufacturing, engineering, software, hardware, and then Cisco called, I jumped on it. 14 years later, I left Cisco, joined a couple of startups, did not love it. Was not infatuated. I'm not going to be in the movie. I ran away from it as far and as fast as I could and said, if you cannot beat them, join them. So I went to an angel group called Bay Angels, and I've been with them since then. This work, this startup business, it sucks. It's hard. It's difficult. It's unrewarding unless you really make it. So for those who do it, I greet you. I salute you. You're the bravest people I have ever met. So, don't let anybody tell you differently. And with that, I'll turn it over to...
Thank you, Jordan. It's great. We're going to take some interesting perspectives from Jordan tonight. He's a contrarian in many respects. It's not all of us that think startups are difficult and terrible and hard to bear through, but we'll get to that topic of conversation as we go along. The job is terrible. Great. Jeff.
Hi, everyone. I'm Jeff Cain. I run the Yodlee Incubator. For those of you not familiar with Yodlee, we were founded in 1999 to aggregate consumer and small business financial information, account balances, transactions, history, holdings. And we make that data available on a user permission basis to our customers, who are banks and fintech companies. We went public in 2014. We were acquired in 2015. We now have about 600 bank customers worldwide, including 7 of the 10 biggest banks in America, and about 600 fintech customers as well. Also in 2014, we decided to start an incubator, which I run. My job is to find entrepreneurs who want to use consumer or small business financial information. I make sure they use our data, not our competitors, and I throw resources at them to accelerate their time to market. We're cohort-based. We've had 40 companies come through the program now. We've had 1 exit. We've had a bunch of companies raise A and B rounds. We are technically stage agnostic, but the vast majority of our companies are pre-seed. And it's very founder-friendly. We don't make companies move to Silicon Valley because it's expensive here and the traffic sucks, and we don't take any equity. So it's a good program, and it's really, really fun. I spend a lot of time hanging out with entrepreneurs, as well as bank innovation folks and VCs, understanding the fintech dynamic. About me, I started my career as an investment banker. At one point, I knew an unbelievable amount about semiconductors. I've forgotten all of that. I've been sort of a biz dev, corp dev, strategic investment guy across a variety of tech companies, and I've done 2 startups of my own.
Thank you, Jeff.
It sucked.
All righty. Gopi, if you would be kind enough to tell us a little bit about yourself and what you're doing now with your fund. It's not working. You need to press that. It's going to show green. There we go.
Yeah.
Perfect.
Thanks to Idea to IPO, and thanks to Perkins Coie and all the supporters and partners who make this event happen. So it's great to have this entrepreneurial community bloom as a result of the support we get from entities like this. Closer? Okay. I'm Gopi Rangan. I'm the founder and general partner at Sure Ventures. Sure Ventures is a new venture capital fund. It's in the process of getting formed. I launched the fund last year. The focus for the fund is on seed stage startups in InsurTech. So when I started the fund, I started thinking about where is their opportunity. I'm an entrepreneur now myself as a result of starting the fund. I have more empathy for entrepreneurs in their fundraising process and how hard it is. It's grueling, it's difficult, and for a fund, it's even more difficult in some ways. What I found was that there's a very, very large market in insurance that plays a pivotal role in our lives on a daily basis. Insurance is a product that touches our lives at highs and lows, and it creates a beautiful safety net which gives us peace of mind. I wanted to use that opportunity and take advantage of very, very little innovation happening in the world of insurance. The products and services that we use were designed decades ago very often. So I wanted to use that opportunity where startups are building solutions in this space. I wanted to support them so that we all have a better safety net for ourselves in the future. And that enables us to have a peace of mind. And then we wake up in the morning and take risks. And that'll allow us to aim for long-term prosperity. So that became the genesis for my new fund. And that's what I plan to focus on. And that's the mission for the fund. So prior to starting the fund, I was with 2 different investment groups. I was with USA's Corporate Venture Group. USA's Corporate Venture Group was about a $350 million fund investing in fintech and InsurTech. I was one of the early investors in InsurTech. And prior to that, I helped start an investment program at a company called Altera. Altera was here in the Silicon Valley. Altera was acquired by Intel. So between the two, there was 1 IPO, few acquisitions, and many portfolio companies. Some of them you might have heard of, like Coinbase and Personal Capital, Prosper, and others. I'm actually very excited about some of the companies that were smaller at that time when I made investments like Roost, Roostify, Robin Systems, and they're all getting bigger and bigger now. I love working with entrepreneurs, so I encourage any entrepreneurs in the room to look at this market opportunity in InsurTech. How many of you have insurance products? Raise your hand if you do. Everybody. Do you want to build a product where someone may or may not buy the product? Or do you want to build a product where everybody wants one? That's kind of a no-brainer. So that's why it's such an important product that it really brings a lot of stability in our lives. And the current system is stuck in legacy, old systems. It needs to change. And we can be part of that revolution.
Sounds great, Gopi. That's, I didn't think that InsurTech could be sexy, but the way you represent it, it will definitely be part of the sexy crowd of companies to actually fund and form. So I'm going to turn to the audience for a minute just to ask you guys a question. So how many of you guys are in the startup world? Do you all hate it? Does it feel exasperating? It does. It is tough. There are some rewards, and hopefully it's not just financial, but in many other ways it makes you grow and wear many hats, which is, I think, what's interesting. So I think all of us have been entrepreneurs sitting on this panel. Every one of us has launched his own company more than once, and I'm sure among all of us, we've had our failures and our successes. So I think it's a great and rewarding thing to do what you guys are doing. How many of you are in the fintech space with your startups? I mean, is this really this relatively focused group? About half a dozen of you in the fintech space? Okay. What is your fintech company? What do you do? 30 seconds, 15 seconds. Quickly, yes. Okay, great. Who else? Tell me. Great. And it's in some way disrupting the market in the advisory field. Great. Go ahead. Is this for short term or long term? Long term. So you're going to compete with Fidelity, for example. Okay, great. Go ahead. We're not family lawyers. Don't love us. Maybe love us, not the family lawyers. Whole different breed. Yeah, great. So obviously, I mean, just listening to you guys, there's a wide array in this fintech sector, and it's a great sector because there is so much going from Waymo to payment processing to the advanced digital aspects of digital security. So it covers a very wide range of space. InsurTech, bank tech issues that go on, and advancements in that, obviously in the advisory services. So it's a great space. Let me ask you, how many of you have actually raised money now? I guess it talks to the same group of people that raise their hands. Have you guys raised money? A little bit? Yep. Mostly friends and family, right? Institutional, anybody on the institutional side raise money? No? Okay. How many of you are employees of fintech companies? None? Or maybe have been employees. Where were you? Out of New York, okay. Interesting. So not that many, right? Yeah. Okay. Interesting. So the reason Rob likes me to go through this is that it gives a focus to all of us as we go through and have a discussion around some of these issues, and I think there really are relevant questions and good questions to kind of set the stage for things. So what we want to discuss today is really multiple aspects of fintech what it is to raise a company, to grow a company from scratch, from an idea to take it into a larger space. So let me ask you, Peter, to start with Peter. What are some of what you would consider the hottest sectors of fintech today?
So this is my personal opinion, obviously, but fintech, I think, is gaining much more relevance as of recent. We're able to collect a lot of data, and now we're also able, through advancements in AI and the sub-layers, machine learning, deep learning, I guess, derive valuable insights from that data. Now, from my point of view, I guess I've always been interested in, I guess, the outer layer, so to speak, and my focus has always been on underdeveloped or developing countries and providing solutions for infrastructure growth in the sectors of, let's say, mobile payments. And we've actually invested into a company called Mocha out of Indonesia, which provides mobile point of sale solutions there. It may not seem something revolutionary here, but actually there it makes a big difference. Another segment that I myself am very interested in is managing your personal finances, your spendings, retirement planning. Those aspects, I think, can be modernized in many aspects. Yeah, those are the key things for myself. Yeah.
Great. Jordan, what are some of the hot companies that, from your perspective, in the space of fintech, what are the hottest companies that are going to be in the sector?
So hot is like sexy, attractive, on fire, is going to be there for 6 months, 8 months, and that's great, and that lasts forever. But from my perspective, there's two elements. On my side, on the micro lending overseas, outside the United States, it's a very growing, prosperous business. Africa is huge opportunity, assuming you can overlook the politics and the upheavals there. Far East is great, not in Japan, but in the other countries where there is increasing demand for financial services from the average Joe. On the other side, the small and medium business is growing leaps and bounds. There's more and more small and medium businesses in the form of individual entrepreneurs, or, the mobile worker, the consulting business. That business is going to grow at a very rapid pace, and financial services is going to help that mobile worker. That consultant grow is going to be very, very, very significant. And of course, there's the millennials and all the things the millennials bring about. And it's a completely different model right now, from buying to renting, from doing things the old-fashioned way to not. So there's a whole sector that serves the millennials for the next 5 to 10 years that can change the way we look at fintech. I'm not big on digital wallets, so that's good. And I'm not a huge fan of blockchain for the interest of blockchain. I think it's an enabler, so that's not hot to me, but that's interesting to watch as it evolves. And I'll stop right now.
Great. So I want to just ask you a question. So micro-lending, right? On the micro-lending, we have the platforms like Kiva. We've had the old platforms like Axion International. Are these being replaced now with newer ways of doing things on the micro-lending side?
My personal opinion is micro-lending is going down to a local level. The large companies, like the ones you mentioned, may not be able to penetrate at a government level, at a country level, at a micro level, because you have to understand and accommodate the localization of these people and what they want and what they don't want. $100 loan in one country is substantially more than a $10,000 loan in a different country. So you have to create that level of fidelity to understand which markets you can grow in at a decent level. I'm not talking about the $50,000 loan or $20,000 loans. I'm talking about something way below that.
Right. On the international level to Africa, over $50,000, you can buy a village potentially, right? So, or the solar system for a village or something of that sort. But I actually really appreciated your mentioning micro-lending. So we'll go to Jeff. Part of it is because this whole aspects of, and this is what's amazing about Silicon Valley and what we have going on here. I mean, these Axion International, in terms of micro lending, has been around forever. I remember Scott Sandell called me from NEA in, I think, 1998 and invited me to go to a meeting that NEA was putting for Axion International, and they're just taking off the ground. But now look at this thing with peer-to-peer lending, which has been a completely new way of doing things on the lending side of the world. It's completely transformed, what can happen and how things happen and how quickly things can happen. Whereas Axion used to go and actually raise funds, in chunks of 10 to 11 to 12, 13 million dollars, and they would go to India, and India back then was not, 30 years ago, it was a lot, money would go a lot further than I would imagine goes in India now, or in Africa, or in sub-Saharan Africa, or in, some other places, and now you really don't need Axion International in effect, right? Because you can accomplish the same under just a couple of clicks and figure out exactly what to do. So great. I'm really happy that you mentioned this thing, and I want to turn to this international issue as we go along, because I think that's a whole different aspect of what is happening now in venture capital and fintech that really was not around 15 years ago. So Jeff, tell me, what are hot sectors for you, for Yodlee, for your investors, or your owner now, right? Because you guys were sold off a few years back.
Sort of to follow up on your question, there are new trends in micro lending. Branch just raised $170 million in a giant Series B. It was by a founder of Kiva, founder Branch. And they're using data. They're essentially using cell phone data, both to determine creditworthiness and then moving money over the cellular network. And while we don't look at the developing world at all, that trend of using data to drive decisioning is hot across a variety of categories, and we spend a lot of time looking at that.
Sure.
In terms of verticals, we look a ton at property tech. I think that's a huge opportunity.
Speak about that a little bit more. Go a little bit more into detail.
Yeah, real estate, giant market in America, still unbelievably paper-based, process-driven, non-digital. That's at the residential, that's at commercial. Every part of it is deeply antiquated, despite the fact that there are trillions and trillions of dollars spent on it every year. So we look a lot at that. We look a lot at bookkeeping and accounting, which is obviously super, super boring, but incredibly lucrative. That's primarily on the small business and kind of the medium-sized business. There's tons of opportunities there to streamline processes, to manage supply chain financing. We spend a lot of time on that. And we look a lot at unbanked, underbanked sorts of things. What fintech lets you do is serve people cost efficiently that you couldn't do under a traditional branch and paper system.
Fantastic. Gopi, I am sure you're going to say insurance technologies is the hottest sector in the market. Am I right?
Absolutely. I think this space is going to produce some of the biggest trends that we will see in the venture ecosystem. And within that, what I like to focus on are topics that incumbents struggle at. One of the topics that incumbents especially in the insurance space, and it applies to many other sectors as well, insurance are not loved brands. The large companies in insurance sector, they're not loved brands. They don't have a trusted relationship with their customers. Many of them don't. How can you build trust in the digital world? How can you wow your customer? How can you delight your customer? How can you turn the position of a company into an entity that the customer turns to for help at any time? That I think is going to create many waves of opportunities. I have two investments in this area. One is Marley. It's an conversation platform, intelligent conversation platform that makes the engagement with a company and its customer a lot more natural and more human, instead of using the fax machines or form letters and things like that. Can you actually engage with the customer and get to know the customer at a human level, so that you can build a more engaging conversation with that customer? The other example is Blitzz. So when folks go out to fix things out in the world, they don't really have a lot of information, field service agents and those kind of people. And in the insurance world, it would be claims processing when you have a damage. Now, you want that to be taken care of really well, like very quickly. Instead of people having to come back 3 or 4 times just to validate the information and prove that what they see is actually true, and go back and verify and keep coming back to repair things, and that's very frustrating for everybody. So can we turn that back? And video is the future. We see so many opportunities where video is going to take over many of those engagements. I invested in this company because they were developing a video-based platform for field service engineers to reduce the number of truck rolls. Instead of going 3 or 4 times, just one truck roll gets the problem solved. So this trend of using technology and giving it in the hands of people who have not had a chance to play with cool technology, that is going to be the big trend.
And how does that speak to the insurance aspect of things? So for example, let me just ask you just a couple of questions. So on the first company that you mentioned, the Hi Marley,
yes,
right? What it does is that it creates a dialogue between the individual who will be buying the insurance and the person who is going to be effectively selling the insurance, right? And this would be a kind of from a communication perspective, it has a better flavor of what is it they need. Is that correct? And do you think this need is going to just grow the insurance market?
Absolutely. The fundamental problem in the world of insurance is that this industry lags behind many other industries in terms of customer satisfaction, NPS scores. Even banks are better. How do you change that? How do you change and convert this into more like a travel industry where people love travel companies, some of the travel companies, not all of them, but some of them, at least be better than banking? Like that's kind of a low bar. Like, how do you do that? And one way to do that is to engage with customers in a meaningful way. Now, selling and buying insurance is one aspect of it, but there are many other aspects. Now, when do we call insurance companies? Typically 2 situations. One, we want to buy insurance or renew our policy, and there's a price discussion. Let's call that a neutral experience, although most of us don't want to do that. And the second opportunity is when you have a claim. Can you change? And that's a very negative experience. When you have a claim, no matter how beautiful that engagement is with the insurance company, you don't want that event to repeat. So insurance companies are stuck with just these 2 opportunities to engage with a customer. One is mildly negative and the other one is deeply negative. How do you change that conversation where you can engage with a customer throughout the year for maybe no reason? At least have a neutral discussion. That would be a big plus. And hopefully have positive discussions where you can add some value to the customer's life. And that is going to be the big change.
Excellent. Jeff, I want to just focus a little bit on some of the stuff that you're doing at your incubator. So tell us a little bit more about your incubator. What are the different things that you guys do at the incubator, right? And also tell me some of the challenges of running an incubator and how you overcome some of those challenges.
What we do is the vast majority of our companies are first-time entrepreneurs, although we do get some repeat entrepreneurs now, particularly because we don't take equity. But most of them are first-time entrepreneurs, usually an engineer or a product manager. They haven't had P&L experience. They haven't marketed. Maybe they've hired, maybe not. And a lot of what we try to do is teach them Startup 101. And here's the importance of brand. And here is how to build a financial model. And here's how to do UX and think about UX. And we do that all at the very highest level, because any one of those topics could take weeks and weeks to teach.
Sure.
But we try to make sure they understand, here are all the things you need to know. Go deeper, hire a consultant, make sure that your first engineer has these sets of skills. And so that's kind of what we try to teach. And then,
so it's really putting them to some sort of boot camp. Right?
Yes, in fact, we do it through 3-week-long boot camps.
So
exactly what we do.
3-week-long programs, and you guys will review number of applications, and you pick what 2%, 3% of the companies that present to you.
Last cohort, we got 120 applications, and we let in 8 companies.
Okay, so the numbers are generally in that.
Yeah.
Right?
Then we also, Yodlee has been selling to banks for 20 years. We know a lot of people in finance, so we can open doors. If someone wants to meet a money center bank, we can provide those introductions. If they want to meet a regional bank, we can provide those introductions. If they want to meet a credit union, not so much. We don't know many of those. Yodlee's a funny company. Our first customer was B of A, and we sort of went down. Most people start with the small banks and work their way up,
Right.
And we're still basically at 40 billion and above banks. The hardest part of working with entrepreneurs is they are like herding cats. They
Did you say something bad about entrepreneurs?
Not bad necessarily, just challenging. It is challenging. They don't like to be where you told them at the time you told them. They don't like to provide the high-res logo that you need to make them a T-shirt. They're squirrely. That goes with the territory. That's why they're entrepreneurs.
And you said one of your companies actually had an exit in the discussion we're having.
Yes, we had a company, Stessa, which helped kind of amateur landlords better manage their finances. You know, the dentist who's got 2 or 3 or 4 income-producing properties and has no idea whether they're making money except when he or she files their taxes. So these guys used Yodlee data, access all the bank accounts. You can look at income, you can look at spending, provide a dashboard. So in real time, the landlord knows whether their properties are making money. They were sold to JLL, formerly Jones Lang LaSalle, the real estate behemoth.
Sure. Yep. That's great. Fantastic. Thank you so much.
Sure.
But you guys don't do any investments in the fund.
We don't do any investments.
Yeah.
Nope.
It's just a pure educational.
It is education. We give them free access to Yodlee data for a year, up to 1 million users per month. So depending on their volumes, that can be worth anywhere from $20,000 to $100,000 of data. And we cover their travel costs to the boot camps. But other than that, no investment, but no equity. There's a ton of mentorship. Yeah.
Any international companies in your cohorts?
We have a Paris-based company right now. We had Paris, France. Yeah, they were very. In fact, we were all in boot camp this week, and when Notre Dame was burning, they were not pleased, as you can imagine. We had a London-based company in our last cohort. We've had an Australian company and an Indian company. Yodlee is worldwide, but kind of country by country. Basically, if a country has or has had Queen Elizabeth on their currency, we operate there. And if there's no Queen Elizabeth, we probably don't.
Interesting.
Yes, exactly.
Great. So, Jordan, going to you. What are your perspectives about cash versus Bitcoin and Ripple and Ethereum and blockchain? I know you have very specific views about some of these. And is cash here to stay, or is it going to be always some room for the digital currencies in the world financial market?
Smarter men, more intelligent women, galaxies of people who know more about this than I do. But I'll tell you my personal perspective. Cash will be around for a while, especially given that majority of the world population don't have access to financial services. They have phones, and that's it. Some countries, 5% of the population is banked, which means if they cannot trust the bank, they're not going to trust the crypto. However, the other side of the world where there's some wealth and comfort, that the crypto is here to stay. Whether it will be Ethereum or this or that or the other, I wouldn't know. If I'd known, I would be a very rich man. But at the end of the day, I think the world's going to evolve into different layers of currency, cash, crypto, some other types of assets, and the technology is going to enable all of them to be available at your level of access. I live in the States. I can have access to any internet anytime I want, day or night, 24/7. And we have 10 minutes to go. If I live in different parts of the world, when I go to Jordan, my country, it's a royal pain in the neck to get access to Wi-Fi anytime I want to. I have to go to a hotel. When I went to India, it was even more difficult. So it depends on where you stack up on the technology level. And that is going to be the defining factor of whether crypto becomes or not become, a worldwide acceptable currency.
And how about blockchain? I heard you don't like the word.
No, I do like the blockchain. Blockchain today is what the big data was 3 years ago, ERP 10 years ago. Blockchain is an enabler. It's a technology. It's a functioning asset you use to do something with. If somebody comes to me and says, I want you to invest in a blockchain company, I says, what do you do? And if they don't tell me what they do and the blockchain is not integral to it, like this aluminum is integral to the drink, then it is really of no use to us because it's just a brand. I was at a Korean event, and this wonderful founder came up and put their slides up, and they had ML, AI, blockchain, and crypto all at once. I'm like, wow, There's some acronyms you left, but I want to invest in you because you just covered it all. Blockchain is not a business plan. It's not an investable option. It's an enabler. If you do it, great. So we have a company pitching on Tuesday. They're creating a technology to have any company create a blockchain enablement tool without even having a blockchain expert in the house. That to me is like Box, is like Google Folder, is like all the other IT enablement.
Interesting. Great. I mean, it's a distribution tool, right? It's a tool to distribute data. That's the way I kind of look at blockchain.
Could be. I look at it as any utility you use to run your business. And in this case, it happens to be a more secure, blah, 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 blah. But it's just a utility to run the business and transform from one type to the next.
Great. So, Peter, I know that you've been, and if I may just extrapolate a little bit on what Pegasus does,
Sure.
which is very fascinating. So what Pegasus does is they run multiple funds for corporates, right? And the corporates are located in different countries and they have different agendas, right? And then they could have a healthcare agenda, for example, or they could have, an automotive agenda. They may have some autonomous vehicle agenda. They may have some fintech agenda, or they may have multiple agendas. And you guys locate companies and you guys invest across different funds into a specific portfolio company. Does that sound right?
Yes, that's actually very correct. And just to elaborate on that further, we do currently have over 28 corporate LPs that we work with. And to me, it's actually a very, very interesting way to approach their problem, I guess, because, they come to us and they have this specific need for technologies that would enable them to do this or enable them to do that. Then basically we'll go out, we'll try to find technologies that are relevant to solving those problems. And, we'll invest. Also, if there's a strategic fit, we'll help those companies, go overseas. And, it's a win-win. It's a win-win for the startup, and it's a win-win for our clients as well.
And these are mostly international LPs, right? These are LPs that are located in different countries, not necessarily.
Yes. So historically, we started out in Japan. That's where we're the biggest. That's where we have the biggest footprint. But we're also, growing in Taiwan. We're expanding in Indonesia. We're actually also, I guess, establishing an office and a fund in China. All of that is more so for financial gain. And actually, me myself, being from Poland, originally from Eastern Europe, now I'm trying to focus my efforts on targeting, Central European region. And I feel it's been very underserved. There's a lot of talent, but there hasn't been enough follow-on capital. Yeah.
So are there portfolio companies from the US?
Majority of them are based in the US, but we invest all over the globe. We have invested in probably over 20 companies in Indonesia. We've invested in, I'd say, at least 10, 15 companies in Japan. So we try to be global. And, like you look around the globe, there's, depending on the geographical region, the companies are targeting different pain points. But it's all very interesting. Yeah.
Great. So the reason I'm asking is to get in, at least in the fintech space, is there some unity of sector or needs to invest across this, the various corporate LPs that you have in specific segments of fintech? Is there some sort of stratification that is actually applicable to more than one LP, over and over, time and time again?
So we have been mostly focused on, automotive, AI has been booming. Fintech is an area that we haven't been very active in to date, although we are looking into it more and more. And, most of the investment that we've made in the fintech space were, I guess you could say, white label products that could be distributed to financial institutions and integrated within their system. That's the biggest need that we had.
Yeah, that's what I was trying to get at, to see if you guys are seeing any specific movement across your platforms and various groups. Something that someone mentioned about the banking of the underserved. I think, Jordan, it was you. Have you seen that trend? Because it's interesting, Peter. If you can, this was the basis of all this upheaval in 2007 to 2010 timeframe. Are you seeing any movement in that space in any major way?
Banking of the underserved.
Underserved, the subprime mortgage lendings, the subprime banking, the people who can't open up a bank account, but they don't have the credit scores to satisfy credit score requirements to open up a credit to apply for a credit card. Are you seeing that?
I myself haven't been focusing on that
Yeah.
space very heavily, but I assume even if there is movement in that space, at least my personal opinion should be approached with caution in some domains. It could have
Yeah.
pros and cons at
Right.
the same time.
Very interesting, because I wanted to kind of like, I know that we have just a couple of minutes to kind of close this, because this was really a big movement in, that created a lot of, downturn of the markets and stuff. So Jordan, you've seen
There's
some of that
quite a
space.
bit of movement outside the United States for the underbanked because of the lack of the things you said. So a lot of payment processing and so forth are becoming to serve as a banking service for all these individuals who cannot have a bank account or will never have a bank account, but they carry transactions through some companies like this. And that's, again, going similar to micro lending. It's creating an ecosystem at a local level to help the communities.
So is that kind of like from a peer-to-peer lending perspective, but with higher interest rate? Is that what's going on?
I don't know about the interest rate.
Yeah.
I think there's going to be a lot of weird stuff going on there, but in terms of peer-to-peer, it is peer-to-peer, but it will be managed through some same old one up and down. Some guy is going to take over or gal is going to take over, manage that community, and create the ecosystem to serve their purposes, but at the same time, enable the community.
Great. Jeff and Gopi, I want to hear from you guys as just the last questions in terms of, where do you see this current trend in our larger, financial sectors going with, all the craziness in terms of the politics, the, boom in the stock market, the continuation of the IPO market, the fact that there's all these other, financially advanced sectors that are coming around, and some of them are growing, some steam. And are they going to, somehow be congruous to each other? Are they going to be parallel to each other? Is the ecosystem going to blow up over the next 2 to 3 years? What are some of your thoughts?
I mean, it's a great time to be a consumer. There are fintech companies doing amazing things for you. The banks are not stupid. They're paying attention. They're improving their products, partnering with fintechs, buying fintechs, and they're all using data, supplied by Yodlee naturally, to provide better products to their customers. And banks have a lot of issues that prevent them from moving that quickly, but they are moving, I think, more quickly than insurance companies. So I see this all kind of coming together and sort of an explosion of awesome products for consumers. Gopi, what do you think about incumbents?
Where the world is going, that's a tough question. I'm a venture capital investor. I'm not an entrepreneur. I believe entrepreneurs are the smart ones. They have a vision for the future and they create that possibility for us. I'm here only to enable that. So my job is to find them, and my job is to help them unleash their dream to the full potential. So I don't really have a strong view on where the world is going, but what I do know is that when we take 2 steps forward in life, it's okay to take 1 step forward back. And 1 step back, it's okay. But when you're forced to take 5 steps back, when you're forced to take 50 steps back, that's pretty bad. So can we find access to financial services, whether it's a banking solution, whether it's an insurance product, that will serve segments of the market that are poorly served or not served at all? That, I think, is possible because of technology. The long tail of technology allows us to create a marketplace for all those people that are left behind. That I'm very excited about.
Thank you so much for everybody that participated. I know there's going to be a question and answering sessions. Go ahead.
First of all, let's hear it for the panel. All right, we have a solid half hour of audience Q&A. We want to take as many questions as possible. So who has a question for the panel? So come on, line up here. We're going to do as many questions as possible. Come on down. And this is not a pitch event, so please no pitches or thinly disguised pitches. If anyone delivers a pitch, we have a bouncer in place to enforce the no pitch policy. FYI. All right, Natalie, go for it. Use the mic.
Do you foresee the banking industry getting disrupted in the same way that by fintech companies like public transportation and cab drivers were disrupted by Uber and Lyft? Are they going to work? Are they going to collaborate with them?
Great question. Are there disruptions coming in the banking system?
I think the
insurance sector?
Uberization of the banking system is not going to happen. They're not as weak and unregulated, and there's so many barriers for Uberization of the banking and financial institutions. Somebody just to come up with this thing and just demolish them like you did with the taxi drivers and their stinky caps. So that won't happen. But I think the banks and some of the financial are smart enough to see that it is inevitable that they have to evolve at a pace equal to or slightly behind the technology. Their defense is regulation. Regulation is always going to protect these institutions from a massive, and just remember, tons of money tied up in that business. So it's not like a bunch of cab drivers. It's more of economies would fall and crumble if that happens. Oh, come on. For God's sake, what's the worst that could happen? The difference between the caps regulation and the banking regulation is in the millions of X's. There's government. There's so many things that are protecting the banks to make sure that they don't fall and crumble like the taxes did.
Brian,
I'm actually with you. I am more positive about the possibility of disruption changing the way we do things, so it's more favorable for us. So there are two possibilities. One is the regulations are going to delay that process, and some of those regulations do protect us, and we need that. In the case of banking and insurance and those kind of legacy systems, it makes it more difficult. But it doesn't mean that they won't get disrupted. Like robo-advisors transform the way asset management works. So they have made it possible for everyday people to have access to asset management in the same way that rich people used to have. So that's those type of things will certainly transform the business model, and new business models will be created. What I'm really looking forward to is there are some regulations that don't protect us. How do we protect ourselves from those regulations? And that's the taxi example where I think it was not the right way to implement regulations. So there are many such examples, and that's where I think blockchain is going to change the way. We don't need regulators and auditors going out and checking, and that's an overhead on the system. Why do we need to pay 3% transaction fees for everything? Like, that just doesn't make sense. Can we use a decentralized system that just democratizes the whole process so we don't need regulations? It naturally takes care of itself.
Like crypto?
Do you want to rely on business leaders and depend on which side of the bed they wake up on? Or do you want to rely on a computer that uses mathematics to make decisions? I'm on the latter side. I'm an engineer. I believe in science.
All right, next question.
Kind of following up on the regulations, regulations like GDPR, data, explainability of decisions. How much opportunity do you think there is right now working on explainability and so on? Or do you think that it's more or less a solved problem?
I'm not sure if I can. So take it a second crack.
For example, if we want to scale up the loan, right? Loans, so automated systems and so on. So the automated systems are making decisions for the customers, and there's now regulations coming by that say, hey, if it's making a decision, you got to make sure that there's no bias. So there's nothing based on race, nothing based on gender, and so on. So there's more regulation coming down on these automated ways. And so my question is around explainability on that, and how do you address that?
I think I understand the question. So the point is that there's going to be all these scalable changes that are going to be happening as a result of what's happening in the fintech space, right? At the same time, every time there's some of these advancements that are mega advancements in some ways, there's going to be some regulatory concerns that are going to be coming on in terms of legislature that is going to be addressing some of the, so to say, if I may, abuses of the scalability of some of these platforms and what they enable. So the question I think is you're asking is, where is the cross section? How do these things cross? You know, where is the debate and the dialogue? And is there some examples in the fintech space that is occurring right now that is being addressed by some of these regulations? And I can give you a little bit of a pointer on this. I mean, I think the Bitcoin and the ICOs are certainly one of those things, right? Where lots of ICOs have gone on for a long period of time without any real understanding of whether or not they constituted securities or whether they were currency. And they kept on getting bigger and bigger. The Bitcoin went to 20,000, and Ether was at whatever, 900 or 800 or whatever it was, or 1400, or thank you. And then the regulatory people came in from the SEC and the various other groups, and they started to regulate the issues around whether ICOs were considered security. And the first SEC no action letter was just sent out a few weeks ago to give some clarity on this. So are there other examples in the insurance industry, in the fintech industry that have similar things? Obviously, I covered the ICO space. Are privacy issues, for example, going to be an issue that will come up to bring down the advancements that are going to be happening in the sector, right? Are there the subprime concerns, you know, that came up in 2007, 2008 as a result of all the, you know, mortgage lending that was going on? I think that's, and it's a very sophisticated question, and I don't think there's an answer, but let's talk about it.
I'll have a very simple and irrelevant answer.
Okay.
Hot dogs. You're allowed to have half a fly per hot dog.
Is that really
The story behind that is people were finding flies in their hot dogs, and then the FDA said, let's regulate this. And it was obvious you cannot have 0 flies in a hot dog, so they allowed half a fly. It's going to happen through the regulation through 1,000 cuts. Every time there's a problem, somebody's going to step up and says, oh, let's fix this, let's fix this, let's fix this. So I don't think it's going to be proactive. I don't think there's going to be a massive movement or some conscious movement. Let's fix this. Let's make sure the algorithms work. Let's make sure Jordan's algorithm doesn't, you know, is biased towards Jordanians and stuff. It will happen through complaints and issues. And it'll also happen after the fact. And eventually it's going to be a pile of stuff that nobody would understand. And there will be another evolution, and just throw it all away and start over.
Jeff, any thoughts about this?
Well, like in lending, which is what I know best of these categories, you know, FCRA exists. It's well-established law and makes pretty clear there are certain classes you can't discriminate against. And banks are very good at not doing that, or probably walking the line. You know, and everybody talks about fintechs with algorithms. You know, these banks weren't just throwing tarot and making lending decisions. They ran sophisticated models, and so they know how to tease apart the model. And yeah, if you're a lender now, you're gonna have to make sure that your black box algorithm isn't a black box, and that you can demonstrate what's going on. And in fact, when you turn someone down, if you're FCRA compliant, and if you're not, you're gonna get shut down. You have to tell them, here's why we turned you down, and here's the actual data. So I think from the lending standpoint, problem solved already. In insurance, I have no idea.
I think in general, all these technology capabilities will introduce new wrinkles, and there will be new issues. So that's natural and expected to happen. What I'm really eager to see is how technology, and specifically AI type solutions, how they behave. They are going to amplify what we do as human beings. So if there are things that we don't do well, and we have biases, that will get amplified, and that will have an impact. So let's take the simple example. When I write my email on Gmail, it autocorrects. sometimes it actually learns the way I make mistakes and it corrects to my way of writing, which is probably not grammatically correct or the right way of doing it, but the AI system has figured out that that's how I write and that's how it should be, instead of correcting it to the correct way of doing it. Absolute right. So that is interesting, because if the AI is going to learn how I do it and amplify my ability, my work in a way that it cannot be controlled anymore. And I don't know what is right and wrong, because all I know is my method. And that's a problem. So in recruiting or in lending or in any situation where we use technology and AI that represents the way a human being does, then that will get amplified. And that is going to create a lot of wrinkles. So the problem to fix is not technology. The problem to fix is human behavior.
So I disagree with you respectfully. I think the value system is localized. What's right for one society, one community, is not necessarily right for another and a third and a fourth. So the ability to manage the localization of that, I think, is going to become incumbent upon the community to try to manage this, but that's always going to happen, in my opinion, after the fact. So if it's not okay to discriminate against people for gender in the United States in certain part of the world, it is okay. It's acceptable. It's not right for us, but it's just the way they do it. And why should the AI fix that problem? It creates a barrier to adoption that would stop that AI from getting through.
So Jordan, I think what you're saying then is you're pro-regulation, because regulation is going to put a stop to these things.
No, I'm not.
Because human beings are going to be
not pro-regulation. I think regulation will evolve after the experimentation and some level of maturation of that, and then the community would say, all right, we know where the barrier is, we know where the boundaries are, let's create regulation to manage this AI thing according to our standards.
Mm-hmm. It's a great question. Thank you for the question. It's a big topic, so we can take some of the discussion outside.
Disagreement is good, as long as it's respectful. Next question.
Well, I got a question for Gopi. I'm just picking on insurance, I guess, but I was listening to, I was going to ask a question about flying hot dogs, but I decided to scrap that. But, you know, we talk about micro lending and we talk about peer-to-peer lending. Do you foresee in the insurance industry the equivalent of the Lloyd's of London model for peer-to-peer insurance? One, and two, what's going on as far as risk assessment? Because some areas, especially in the casualty insurance business in the United States, Western Hemisphere, has had a couple of really tough years. So how do you know, is that number one, is that a possibility for peer-to-peer insurance? And how does risk factor into that in terms of dealing with it?
So the two parts to the question.
Thank you.
Peer-to-peer aspect. Can we replicate the success of peer-to-peer lending and the similar methods in the world of insurance? Can people in a community kind of insure each other? There are some solutions like that have existed, like mutual insurance, those kind of things. But the insurance world is far too regulated. So it's not going to be easy to build a peer-to-peer solution. There were some InsurTech companies that attempted to do this. They've kind of moved away from that model. So that's an easy question. I think it's quite complicated. It's not going to happen easily. Might happen in the future. But the more interesting thing is the risk part. How do we measure risk? How do we underwrite risk? How do we distribute risk? And how do we manage it? And those things are open for innovation. There's traditionally the information that is used to price risk is changing. There is a whole lot of new data that's available. There's a tsunami of data that's coming out through IoT devices, and then the petabytes of data that hit us every day. The amount of data that's available, digital data available in the world, is doubling every few years. So in that world, how do you price risk? How do you measure, manage, and distribute risk? That is going to be very interesting. So the insurance companies are very, very good at legacy information. The technology companies are very good at current information about people. Like Google knows a lot more about us than any other insurance companies do. So is there a way for these two guys to battle it out? And which startups are going to enable that? accelerate that race. That's quite interesting to watch. So I think in the end, net consumers will win.
So
once this race starts.
Gopi, I wanted to talk to you about this peer-to-peer insurance and in the insurance market versus the banking market. Peer-to-peer lending in the banking world was pretty complicated. You know, this was not an easy task. There was this issues of, you know, on the securities law aspect of things, whether or not these were securities, and the big fight between Prosper and Lending Club was over whether or not this what they were doing constituted a sale of securities pursuant to general solicitation, and one of them, you know, Lending Club filed the S1 and went forward, and Prosper fought the SEC. So that was one aspect of it on the securities laws issue. On the issue of the banking regulatory world, it was also a big fight, right? So I'm not sure that the insurance world is any more regulated than the banking world. You know, they both have, I think, equally complicated banking regulations, both on the state side and on the federal side, that they're applicable to both of them. So it's interesting to me how insurance world has fallen behind, whereas the world of banking actually has taken hold of the lead on this, on the advancement. So again, it's a great question, very interesting. I'm not sure. I'm not satisfied by the answer.
You should not be satisfied with.
And again, it's not a question of being satisfied. I'm just not. I'm not satisfied with the fact that somehow the banking regulatory system is more complicated than the insurance regulatory system. But I think it's very often it's the question of the business prospect and how it comes about. You know, somebody mentioned Uber and Lyft. You know, and you know, the stinking, you know, cabs that were replaced by even more stinking cars. But it's a question of when these things happen and how they happen, and it's just a fire, you know, that suddenly takes over, and it's purely an issue of the business prospect that somebody, you know, takes on, or somehow things actually catch on. So I think I'm with you though, Gopi, that I think the insurance industry is up for a huge, you know, of turnover in terms of how they're doing things. It is an antiquated system. I think the whole thing is based on legacy systems and legacy ways of doing business. And you know, who knows what will happen if, you know, universal health insurance comes up, and how that will affect the fate of the insurance companies, and whether that will be a success or failure in terms of a political aspect of those things. So it's fascinating questions.
All right, we got about 10 minutes left. We have 3 folks in line with questions, so we want to make sure all their questions get answered. Next.
Can you comment a little bit on the innovations in wealth management, especially as it relates to kind of making all these illiquid investments, like maybe an average investor investing in a venture capital or a private equity or some kind of other exotic illiquid investments, or any trends in this wealth management space?
I'll give one example. There's a host of opportunities here in wealth management. One of the companies I recently invested, which is part of Yodlee's accelerator program, is Rocket Dollar. So when you take retirement accounts, IRAs, 401ks, there's multiple $1 trillion of capital available in the retirement accounts. Almost all of it is invested in stocks and bonds. The providers, the brokers that allow you to trade, they don't offer alternate investments as a choice. But many investors want that. How do they access alternate investments? Are there any platforms that make it available? If you look around, there are a handful of them, but they are terrible with customer service, and people are very unhappy with it, many of them. So can we create a solution that's born in the digital world and makes it easy for people to use online systems and mobile platforms to open an account and use their retirement funds to invest in alternate assets? This is typically available, like I said, only for very, very rich people. Maybe they have access, and even they don't have access to a seamless, beautiful online platform. So can we create those possibilities for all the people in the world? That's especially in the U.S. because of the way 401k is regulated. This is a big issue. And I see huge opportunities here because a lot of individuals now are aware of this. And they want to have access to different asset classes besides the stocks and bonds that they're exposed to. So clearly there's a huge opportunity. This is just one example of maybe many, many more that will come up in wealth management.
And again, I don't want to harp too much on the regulatory aspects of these things, but investment in these funds is also limited because of the Investment Company Act and securities laws issues and many other aspects, Investment Advisors Act and various other acts that apply to it. So there's part of it is that the regulation probably hasn't caught on with the business interest in the expansion of this to a large sector of people. And much of it has to do with the fact that they're illiquid and people will lose their money or they'll be tied up for a very long period of time. And it cuts against what the SEC has always wanted to do, which is, provide liquidity for mom and pop and don't let these guys to go into, asset classes that they have no understanding of. So.
Blitzz.
Evening, gentlemen. 2 questions. Just drawing on your collective knowledge for the fintechs in the room. What CVCs have you seen to be very active, whether it's obvious or not obvious, in the fintech space, but filtering that question down to non-banks that are CVCs and investing in anything other than crypto? The second question is, use your crystal ball for looking at the amount of capital and the valuations for fintechs into this year, and then in the first half of next year, what do you see going on?
Thank you so much, Louis. So who wants to take that? We want to CVCs in sectors other than fintech. Go ahead.
I'm happy
Gopi,
to.
I think
10 years in CVC. The challenge with CVC is that they have multiple priorities. Most CVCs have a strategic motive and a financial motive. And that makes it really, really difficult to build a well-run CVC program. Compare that to venture capital investors who are purely motivated by financial returns. They can align their incentives with the entrepreneurs much better. So there's a basic fundamental difference between how institutional venture capital investors work and how CVCs work. So that creates a host of issues. And CVCs are also driven by the changes that happen within the large company. So 2 bad quarters can change the way CVCs work. VCs will never do that. VCs have a very long-term view. Their funds are 10-year long, and they keep looking at Fund 1, Fund 2, Fund 3, and keep building for the future. CVCs don't sometimes, or actually often, they don't take that view. So they get a very bad rap and poor reputation in the world. And they come and go. So today we are at the peak. We have more than 1,000 CVCs, but that was not the case a few years ago. And when a downturn happens, I'm very ready to bet that most of these CVCs will run away. So I give this explanation because now as an entrepreneur, you have to choose who you want as a partner, as an investing partner. So you want to pick those investors very carefully, so that you will have a partner that stays with you through the ups and downs.
Just to clarify, the question was which CVCs were active investing in the fintech space, or not banks, or that are not investing anymore?
I can give you an example. A couple. State Farm has an incubator just down the street, and they're actually actively investing, for example, on Page Mill Road. But go ahead.
I mean, the only non-bank CVC I see is Orange. Everything else is bank or brokerage, wealth management firm, but I'm going to call those all financial institutions. Orange is the only one we see, and we don't see a lot of them either. I mean, why is the CVC like if you're Ford's venture arm? Why are you going to invest in fintech?
But Orange, you're talking about the mobile company, yeah, and they are active in multi-sectors, right? I mean, they're pretty active in semiconductor and otherwise. But the other CVCs that are, I mean, there are some. We can have this discussion a little bit further, but PitchBook is a great source for some of these things, and they do these analytics on a quarterly basis, and they had a specific report in the year-end report on the activities of CVCs, and they're sector specific. So I refer you to PitchBook. We're actually partners with PitchBook, and they do a pretty good job. So great. Yep. valuations. And your question was? Yeah. Get used to it.
My crystal ball is very foggy. No clue. It's by sector. It's by stage of the company. It's a very complex equation to decide what's the value is going to be just across the board. Right now, it's the recommendation is if you can get good valuation for your company, sell. And if you can raise money without affecting valuation, go for it, because we don't know what's going to happen in 2020 and 2021. But otherwise, I don't know what to tell you.
The market is flush with cash, right? And with all the IPOs that are going into the pipeline, there's going to be lots of people cashing out, right? So this is going to keep the stock market going on for this year. So the first quarter of this year, in 2019, they were expecting that the amount of dollars that would go into venture capital would actually decrease from last year, which was really at an epic high. It wasn't the case. The dollars remained constant with last year. And I think part of it has to do with the fueling of what's going on, because typically what happens in terms of valuations, to the extent there is deal flow, to the extent the venture capital funds are getting cashed out and they're feeling good about their next fundraising and their next fund is probably already on the way, the cash is in the system and it's going to be expended. To the extent that there's cash in the system and being expended, there's room for valuation growth, there's room for companies. But what happened in 2019, if we want to get take any lessons from it, the number of deals that were done was actually fewer, and the dollar amount per transaction was a lot higher, right? Which is the fate of the unicorns, right? The unicorns have created that anomaly in the market. So early stage, I would say that the crystal ball looks still pretty good, because so long as there's all this cash coming out into the market from the cash out of the IPOs, these guys are going to be around funding companies in their own sectors. And things are the ecosystem looks relatively healthy, I think, for the next 12 to 18 months. That's what I see.
We have time for one quick question and some quick answers. Rama.
It's a quick one. This for Jordan. The cooperative banking used to exist in developing countries, which is close to what micro-lending that is happening right now. Do you see big banks looking at micro-lending as an extension of another business division, or you see really disruptor innovators coming into micro-lending, especially in the developing countries?
Thank you.
The developing countries is an adventure for corporations, and it's usually not a safe adventure. The countries that are in need of most need of micro-lending are the ones with the least stable government systems, with the least growth in their GDP and what have you. The reason microlending is needed is because those citizens can't access cash like we do. So in my opinion, my single humble opinion, banks and corporates are not going to foray into the microlending in a meaningful way. It may be a corporate responsibility, it may be some person on the board that feels strongly about it and they're pushing that, but that's not a strategy they would undertake. It will take place through the nonprofits, through the grants, and they try to leverage that to create some microlending. But the peer-to-peer will be the way to change the ecosystem over there. It has to come from within. If it comes from the outside, it won't last very long.
Thank you, Jordan. What a great group of panelists. Thank you so much. I'm thrilled to be in your presence at these IPO events. The amount of brain power and foresight and experience is formidable. Thank you so much for spending the evening with me. Thank you all for making this all happen. 1 second. These events wouldn't happen without your participation. So it's great to have you here. And thanks to Rob for putting together this amazing group of people. Quarter after quarter you come back, and every time you amaze me. Thank you so much, Rob. To you.
And let's hear it for Armin Pahlavan, our great moderator and food sponsor. So, well, Let's hear it for all the rest of our sponsors, partners, our event team, and our video team. Applause, and the audience. So you guys can stick around, network, socialize, and connect. As a courtesy to Perkins Coie, we'd like to leave the building by 9 p.m. There's a Starbucks at 2000 El Camino Real, FYI, if you want to keep the conversation going. Thanks for coming. We'll see you next time.